Time to bring some business news now. We're going to start in China, in fact, where new growth figures are better than expected. Cole Stangler from our business desk is joining me here on set with more on that. Cole.
Yeah, that's right, Stuart. Some good news then, despite those lockdowns that we've been covering in China. These numbers out this morning from the country's National Statistics Bureau. In China, now, over the first 3 months of the year, the country's economy grew at an annual rate of 4.8% when compared to the same stretch last year, as you can see here. A big source of that strength is manufacturing, with industrial production staying strong and exports growing more than expected. But as Nick Rushworth reports, several challenges lie ahead.
The wheels of the world's second largest economy are turning faster, with first quarter growth up in China. The Chinese economy is growing at a rate of 4.8% a year. That even with COVID shutdowns in place in major industrial cities.
Since March, the global situation has been complex and fluid. In China, COVID-19 continues to have an impact on the economy. Some of the unforeseen factors exceeded our expectations.
Challenges lie ahead. It is feared the strict lockdowns imposed in March could disrupt supply chains within China as well as internationally. They are already hitting Chinese consumers, with retail sales falling more than expected last month. Beijing's growth target of 5.5% for this year looks unlikely. Market analyst Stephen Innes is optimistic about the Chinese economy, saying it will get more support from the People's Bank of China.
I think the PBOC is going to continue adding stimulus to this market, even more so when COVID lockdowns release. So they're going to throw a lot of money at this economy, is my view. And I think things should return to normal quite quickly in China. Fingers crossed, that is.
Investors, meanwhile, are waiting to see what happens with the Evergrande Group, one of China's biggest developers. It's still struggling to avoid defaulting on 287 billion euros of debt. Chinese officials say the impact on the economy concerning Evergrande can be contained.
Markets in Hong Kong are closed today for the Easter weekend, but we've seen investors elsewhere react to that data from China. Shares here on the Nikkei down just over 1% losses in Shanghai as well. Over in Seoul, the Kospi holding just about steady. European markets closed today as well for Easter, but Indian markets have been looking at in the red as well, with the benchmark index here down 1.9%. IT stocks with some very heavy losses in India. That's after tech giant Infosys missed its quarterly profit estimates. Its shares down almost 8%. Meanwhile, talks are set to begin today between Sri Lanka and the International Monetary Fund. The island nation's in the midst of an economic crisis, fueling protests over the last few weeks. Amid power cuts and fuel shortages, the government's already suspended foreign debt payments. It's now seeking a loan package from the IMF, aiming to borrow $3 billion over the next 3 years. The country is also in talks with India and with China over separate relief programs. And finally, to Mexico. After a marathon session in Parliament, lawmakers there have rejected a controversial set of reforms backed by President López Obrador. It would have strengthened the state-owned electricity provider, reversing liberal reforms made by previous governments. The U.S. and Canada had been critical of the proposal, warning it would violate a regional trade pact and disrupt foreign investment. The measure ultimately falling 60 votes short of the two-thirds majority required to pass. So, Stuart, a clear defeat here for AMLO, the Mexican president, though observers say there could be other reforms coming soon for the energy sector.
Thanks so much, Cole Stangler, with that business for you here on France 24. This time next week.